with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's going crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Chief Investment Officer at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I can put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, April 17th, 2026. Some shout outs to Peggy, David, Beth, Bill, all the folks that stopped by to say hello to our team at the booth at the 55 Plus Expo there in Dover this past week. So thanks so much for everyone tuning in week in and week out, staying up to speed with what's going on out there. Speaking of which, what is going on out there? Well, the market's ripped higher this week, and I do mean ripped higher. On one hand, that's really good because it means your account balances went up. But on the other hand, it's a little concerning because sometimes the biggest rallies, the biggest, most violent moves to the upside come in markets that are not very healthy. I'm not saying that's the case, but I'm saying that it's one of those things that give me a little bit of pause. It makes me not ready to just jump in and say we've got the all clear. That's for sure. So what about the numbers? Dow Jones up 3.2% this week. S&P 500 up 4.5% in a week. NASDAQ Composite up 6.8% this week, and it's having one of the biggest rallies in its history right now. Again, gives me a little bit of a pause there, honestly. It's up 13% just for the month. Russell Small Cap Index up 5.5%, also having a great week. So all the major indices have turned to the positive for the year. So that's a good sign. Looking at some other things, the volatility index came down a bit this week, down 9% to 17.5. Long-term bonds is measured by the TLT, up about 0.7% on the week, about flat on the year. When you take a look at the different sectors, it was the defensive areas doing most poorly. Utilities were down 1.7%. You saw consumer staples flat on the week, and energy down 3.3% this week, down 10% for the month. And that makes me very happy that we trimmed back some of those big gains we had in energy a couple of weeks ago. You may recall we trimmed back Chevron, Exxon, a little bit of Schlumberger. And listen, this is a good segue actually to this week because it's April 17th. That means tax day was just a couple of days ago. It is the most detestable day of my life is tax day. I just get so disgusted by it. One, because of the amount of money that you have to pay, but two, because of how they blow it and squander it and just act like it's their own to do whatever they please rather than do what's good for the country and the people and everything else. It makes me sick to my stomach, but that's what we've got going on. But my point to bringing this up is this. I know it's a painful week, and I have to say, it's a little bit more extra painful this year for some BIG clients with taxable accounts. Why? Because we had some bigger capital gains last year. And the reason for that is, look, 2022 was a brutal year. We've had a couple big downturns here and there in the market over that period of time, 22, another time there in 23, et cetera. And we've done a lot of buying we did during those downturns. We had huge gains last year. And coming into 2026, I didn't like what I saw for the market moving forward. It was expensive. There was concerns about this year, some concerns about the economy. Now, let me tell you something, folks. If you do not take profits when you have them in a prudent fashion, the market has a history of ripping it right out of your hand. The market does not care about you. It does not care about you at all. And it does not care about your profit, not one bit. And folks that like to just hang on to it and think it's going to be great, well, listen, that's when the market can really punish you. I mean, just you take a couple of examples. Look at Ford Motor Company for the past 20 years. It's been up over 100% a couple times, and it's the same price now as it was 20 years ago. Same with Nike. Campbell Soup is right now is like back to where it was 40 years ago. My point is, markets do these things. And if you don't take some profits in a prudent fashion when you have them, then you run the risk of giving them all back. So look, I felt it important last year to harvest some gains. We try to manage for taxes and capture long-term gains when we can. We try to capture losses where we can to help offset those gains. But you got to take them sometimes, folks, or the market's going to take it back. And we position ourselves very nicely for what's going on so far year to date. Look, we've been weathering the storm in an incredible fashion, and it's because of those moves that we made. Don't make the moves, don't reposition, then you take it right on the chin when the market decides to deliver some pain, which it will always do from time to time, sometimes greater pain than others. So anyway, all that to say, it was a painful week with taxes, but it's because you're making money. Looking at the good sectors this week, tech was up 8% this week. Retail sales up 5%. We saw consumer discretionary up 6.6% this week. So consumer-driven areas in tech really having a great week. A lot of that's because we've had some really good commentary on the consumer. Airlines have said some great things about the consumer. Banks saying some great things about the consumer. The consumer is showing a lot of strength right now, and the market likes that. And look, it's 70% of our economy. No wonder it likes it. I would like it too, 70% of what drives the market higher. Gold up 2% this week, silver up 6.5%, so they too looking a bit more constructive. So what moved markets this week? Well, we got a few things going on. First of all, earnings have been coming out. They've been good as expected. We expected to be great, actually. They've been really good so far. Banks reported this week. Citigroup really led the way. It was up 6.3% this week. That's one of the ones that we have in our models. Other ones didn't fare quite so well. Wells Fargo was down a bit. JP Morgan was flat. But I was happy to see Citigroup do so well. Other than that, outlooks so far have been okay. It's been early right now in earnings season, but so far so good. We're off to a decent start. Economic data has also been tilting towards the positive. So the data that's been coming out has been pretty good when you take a look at the whole picture there. So that's been helping the markets. And the biggest thing really has been the war in Iran. So last weekend, it looked like things were getting ready to go off the rails, right? We had a big move up last week in the markets because things looked like they were getting more positive. Then last weekend, J.D. Vance and company departed the negotiating table without a deal. Things looked bad. The market really looked like it was going to turn sour there on Monday. But look, somehow the market sniffed it out before the press did because the market turned around, got positive, stayed constructive all week long. And now here towards the end of the week, we're hearing that the Strait of Hormuz is opening. Fish ships are starting to flow and move through there again. Maybe some things are coming together there with a deal with Iran. I think maybe the market really liked the fact that the Navy just came in and said, you know what, do what you want. We're going to block things up. We're taking over. And maybe the Navy getting involved in the Strait of Hormuz is what causes market to take that leg up. But it did seem to sniff it out ahead of everybody else as far as the press is concerned. So what about now moving forward, right? Do we have the all clear? No, unfortunately, we don't. Look, this is very positive. The things that have taken place are very positive. But a couple things I want to point out to you. That month-end indicator that the market broke through at the end of March, it's only been a couple times over the last 100 years. Let me say it again. Only a couple of times in the last 100 years that the market just barely broke that indicator, bounce right back up and not look back. It's only happened a couple times. Maybe this will be the third or fourth time, but that remains to be seen at this point in time. Secondly, the biggest rallies, the biggest, most incredible, violent rallies to the upside tend to happen in unhealthy markets. I'm not saying we're in an unhealthy market, but I am saying that this has been a very violent, incredible move to the upside. The market's gone from oversold to overbought very, very quickly. Third, the market's gone to overbought very, very quickly. Look, the S&P oscillator, I think, is like almost 8 right now. The market indicators are starting to show signs of exhaustion to the upside. I think that this has been a very fast and extreme move, and it could be getting close to being out of gas. I'm not saying it is, but I'm saying it could be. Finally, levels. We got over a really major hurdle at 7,000 on the S&P. That's great, but it's got to hold that level through next week, through next Friday, to give us a little stronger degree of confidence than what we can have right now. So I know it feels great. I know it feels wonderful, but understand something. I told you earlier, the market doesn't care about you. And I don't mean that in a bad way. I'm just being honest. And this is one of the things the market has a history of doing. It sucks people in, making them believe that everything is great and they've got the all clear before it just beats them down again. I'm not saying that's going to happen. I am not. I don't have a crystal ball. I don't know. What I do know is I expected a volatile year for 2026, and we've got the portfolio's position where it doesn't matter either way. If this market wants to rip higher, we'll do fine. If this is a gigantic head fake, we'll do fine. I think we're positioned very, very well, and you can see that when you take a look at your accounts. We've weathered the storm this year quite nicely and are doing quite nicely at the moment. So we'll see what this market delivers next week. More earnings are going to come out. Kind of light on economic data next week, but we do have more earnings, so we'll see how they are going and what they say in regards to outlooks and things along those lines. But I like where things are positioned. We'll see how things unfold from here, okay? So between now and next few meetings, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it is retire, Dana. Maybe it is buy that next house, that big trip, pay for college. Hey, you know what your goals are. Don't just think about it. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.